A very warm welcome. You're watching daily edition of Your Trade. This is Priyanka Uppal along with me, Snehi. Of course, supporting global cues there was Snehi, and that's what we saw. That the sector-specific moves were clearly seen in the weeks leading up to the budget. Nifty though saw a narrow range of around 100 odd points. Banking stocks were clearly under a pressure today, with heavyweights like HDFC Bank, ICICI Bank dragging down. But then sectoral gainers were clearly the defensive pack: FMCG, pharma, energy, consumption. They were the packs that were gaining today. Top stocks on the Nifty were ONGC, ITC, Tata Consumer, Nestle, HUL in large caps, and a couple of stocks in the broader markets were Nalco, BHEL, REC. So there were some set of metal stocks which were gaining and others were draggers. But then clearly the sectors which were on the move were FMCG, pharma, energy, consumption. Now stocks which had news-specific moves or maybe the quarter one updates, bagged moves, they were visible. Titan, which had a weaker quarter one updates, it was down by another 3.5%. Couple of brokerage notes also were on Titan. JP Morgan had cut target price, Goldman Sachs cut target price, and in fact that's what was clearly weighing on the stock, and that was visible. It's down, it's closed with a cut of 3.5%. But then consumption side of the stocks were very strong, Snehi, what we saw. You talk about Marico, Dabur. In fact, there's a clear breakout on such stocks and a couple of bullish notes also. Other than that, some sectors which are seen as a budget-specific sectors like railway, infra, defense, they were clearly on the move today. So overall, it was a narrow-range trade on the index, but not at all a narrow range on the sector-specific, which were leading up to the budget.
Absolutely. So, very well put there by Priyanka, covering most of it about what happened in today's trade. But some for more sectors that I want to mark today, the fertilizer pack was up and away in today's trading session. You take anything from an RCF to an FACT to national fertilizers, you have gains between 9 and 12% coming. You have Deepak and Chambal also that did pretty well for themselves. Chambal was up 3% over the course of the day. But there you have it. You have RCF and FACT. If you could pull that up on the screen as well, some very stellar moves coming in for both of these stocks from the fertilizer pact as well. Like Priyanka mentioned, railway stocks are up and away. You have RVNL, RITES, IRFC, IRCON. You have all of those stocks doing really well in today's trading session as well. So good moves coming in, and of course defense, Guardian Reach, Cochin Shipyard. You've seen some exuberance coming in over the course of the past few weeks, and that continues for the defense stocks as well. You had REC PFC that did very well today. You had Paytm that was a surprising winner in today's trade, because away from all the market moves, you have Vijay Shekhar Sharma, who's saying that he plans to make Paytm as big as $100 billion company. So that positive commentary coming in. Paytm also held up pretty smartly in today's trading session. PSU banks largely under pressure, and FMCG were your top sectoral gainers today. Also, we'll talk about some ET Now exclusive on the entire budget front and what we can expect. But before that, let me bring in our technical expert on board, and that is Nooresh Merani today, to understand about what the trading session looked like and what we can expect tomorrow. Nooresh, hi, thanks so much for joining us on the show. Talk to us about this range-bound trading session that we've seen today. Not much happening on the market front, but when you take a look at India VIX, that index was up 7%. We've seen some slowdown coming in on that front on the positive side. Now it has spiked up again. What's your first take about what today looked like and what we can expect going tomorrow?
So overall, if we look at the markets, we've rallied post the exit poll. We saw the corrections on the election day. We rallied across the board 15 to 25%. And a pause after that in the broader market would be normal. Same way on the index, we could get into a pause, consolidation, tight range of say 300 points on the Nifty, 500, 600 points on the Bank Nifty. But in that period, there could be sectoral rotations. We've seen the sectoral rotation in terms of oil and gas making a comeback. That's been a breakout. Metals is getting into a breakout. We've seen Nalco at a new all-time high today. And other names also slowly perking up. So we are seeing sectoral rotations, and that should continue going forward as well.
Very valid point. Sectoral rotation happening, and it happening at a very rapid pace. So which are the sectors that are expected to do well? You've listed down few of the sectors. Are your recommendations also from these spaces? Consumption will hold up, metals will hold up. What are your recommendations?
So looking at two names more from the, say, a start of the rally rather than the sectors which have already moved up. So first is an FMCG ITC Limited. The stock has gone nowhere for many months now. Almost a year of zero return. At the same time, in the last few weeks, we've seen a strong move across the whole FMCG pack. In the last 2 days, finally, ITC has given a short breakout. The recent swing highs of 440 have been taken out. That indicates finally the trend has changed and it could go where previous all-time high zone of 480, 500. So it's a buy at current level with a stop loss at 430 and a target price of 500. Second is a buy on Suntech Realty. What we've seen in the whole realty space, everything has done well over the last 1 year. But Suntech Realty is available at the same prices where it peaked out in 2021, as well as in 2018-19, the stock had peaked out around 500, 530. In the interim, the stock did give a breakout above those levels, went to 620, and now is available at a retest around this 550 mark. So a good entry point here. I would expect the next move to take it much beyond the recent highs and play the catch up with the whole real estate basket. So a buy at current levels, the stop loss at 520 and a target price of 700.
Nooresh, thanks so much for your picks and your views coming in. ITC and Suntech Realty are buy calls coming in from Nooresh today. But moving on, well, rains have been on a breakout today, at least in Mumbai, and Shrishti is joining us with a list of stocks, either on the breakout or breakdown side. Shrishti, over to you.
Well, certainly. Let's have a look at two of the breakout candidates. And the first one is indeed ITC, because the FMCG pack was definitely on the roll today. And what we have spotted on ITC is that the stock finally made an attempt to break above its key resistance of 440 odd rupees. Not just that, for the past 2 days as well, it has been taking support at its 20-day moving average exactly, and then taking above. So that's the second day on the trot that ITC was on the up move. A good and a strong gain in today's trading session, and hence we have spotted a breakout in this particular stock. Moving on to the next counter then, and that too is a breakout candidate, though the metal pack was quite silent, but Nalco definitely stood out in today's trading session. What we have seen is that here too there was a key resistance of 200 odd rupees earlier as well. We have seen the stock making a chance to move above that. So this is the third attempt for Nalco to move above those levels, but it was also supported by a long build up on the derivative side, though the stock has been on the top uptrend for the past 7 to 8 trading sessions, but never indeed it was a breakout that we have spotted on Nalco as well. So these are the two stocks on the breakout side. Back to you.
All right, thanks so much for highlighting National Aluminium as well as ITC. Srishti also finds a breakout on the veteran, as Nooresh has also spoken about these stocks. Let's go ahead and let's get your word from the wise. We did speak to Vineet Sambre today, and how must an investor wade through the current market peaks? What are those pockets of opportunity that you should absolutely watch out for? Time for some opinion from DSP Mutual Fund's Vineet Sambre, who sounds bullish over capital good play, entire theme he's bullish on the back of the robust order book. Let's listen in.
As far as the earnings are concerned, my sense is that over the next 1 or 2 quarters, overall, as I said, there is a moderation which is expected. Banking sector, which has been growing at upwards of 20-25%, will sort of come off at around 14-15%. But that itself is a decent growth. I would say that purely from the earnings perspective, the engineering capital good companies, they should show strong earnings momentum given their order book. Have been order inflows have been good, and only thing is that the valuations there are pretty high, and one has to be slightly more careful. As far as the IT sector is concerned, maybe they are showing signs of bottoming out from a flat to very low earnings momentum. Maybe they pick up some bit and they go in the high single digit kind of range. And over the next 2 quarters, we see that the sector should sort of come out of the low growth phenomenon is our expectation. So I think broadly, and healthcare, as I said, is likely to show decent growth metrics over the next maybe 1 year or so.
All right, that's the word coming in from Vineet Sambre. Positive on capital goods is his bet. But on that note, viewers, we'll slip into a very short break on this edition of Your Trades. We'll be right back with what the derivative outlook is looking like. So you stay tuned.
Welcome back. You're watching Your Trade. So there was a bit of concern on the index level. If you see, a flat trend was visible on Nifty and derivatives, whereas on Bank Nifty, it was a clearly short build-up. And hence, we saw that the heavyweights were draggers today. India VIX was 13.6, but then the active calls, where the maximum of the call writing was happening at 24,400 and 24,500. So these becomes the immediate resistance level also for the index. But in terms of the support, we have immediate support, which is now at 24,300. We close above that only, and the immediate post next to 24,300 is 24,200. That's where the support looks like. Snake.
All right, let's move on then and take a look at the big story of the day, and that happens to be Titan today, because Titan has reported a rather weak set of Q1 updates coming in, and the company saw a 9% year-on-year growth in the first quarter. This is the first time since Q4 of FY22 that Titan has posted a single-digit growth number. Winnie Motiwala is joining us with more details on this. Winnie.
So yes, in terms of Titan's Q1 update, that missed the street estimates, and overall the company registered a 9% growth in the first quarter of FY25. Domestic business growth, that is of the jewelry segment, that was an 8% growth only this time that we saw, mainly impacted by the high gold prices that impacted the consumer sentiment, as well as the low wedding days during this quarter also clearly saw an impact coming in the jewelry segment, and that is why the studded ratio or the studded growth also is moderately lower, is what the company highlighted in the Q1 update. So yes, a moderation is what is expected in the studded jewelry growth. Watches, wearables, that also didn't do much of an exciting thing there in Q1 FY25. When you're looking at it, domestic business, that saw 14% growth overall, analog business 17% growth, while wearables, that saw revenue a decline of 6% is what the company is highlighting. Premium products, that's continued to do well for the company. Eye care as well as Taneira, low single digit growth, so 3% is eye care business growth, as well as Taneira, 4% growth, while Carrot Lane manages to see a 18% growth on a year-on-year basis. So yes, we're surely keeping an eye out on the jewelry growth as well as the overall growth of the company, because overall analysts also have downgraded the stock. When you look at it, JP Morgan, they downgraded the stock to a neutral rating, and from an overweight rating, cut the target price to 3,450 rupees per share. For them also, the revenue was a miss, lowering earnings and downgrade to neutral is what they did because of the emerging risks. Market share gain is something that they are watching out for. As of now, it's intact, so keeping an eye out on that. Other than that, even Goldman Sachs cut the target price to 3,700 from previous target price of 3,800, and they're saying that the key competitors did much better in Q1, which is a cause of concern for Titan, and Titan's jewelry margins also are likely to be weak in Q1 FY25. So when you're comparing it to competitors like Kalyan Jewellers, they managed to report a stronger Q1 FY25 update. So key highlight is to watch out for Titan today, down and out.
Was clearly down 3.5%. And Vinny, thank you so much for highlighting what came in the Q1 updates and the brokerage notes, what they have to say on that. But the quarterly updates where major FMCG companies have started coming in, while Dabur India's business is likely to see mid-single-digit volume growth, Marico's consolidated revenue is expected to be in high single-digit. What lies ahead for the sector? Listen in to what ET Now's Chief Editor-in-Chief Nikunj Dalmia has to say on this.
You actually will see outperformance coming in, especially FMCG, rural housing, and anything which has got to do with a demand push. That's how markets would move. The budget date is out. Large part of attention would be, okay, how will this budget be different from last year's budget? If last year's budget was in a sense highly focused on capital expenditure, what could be capital expenditure plus? The grain of the truth here is that the rural economy is not in a good shape. It needs push. Push will only come by spending. Spending will only come by tax cuts, which means market will start talking about tax cuts and push to rural economy. If that is the underlying moot point, that means FMCG stocks, which had this big day on 4th of June and they little bit of follow-up buying after that, they've not really seen a follow-up buying. But now that budget is out, it's raining and it's pouring, monsoons are in a, the progress, you may not like what's happening in the roads of Mumbai, but in general, the monsoon progress has been strong. Markets automatically will start moving into defensives, and at a time when the tailwind for the sector seems to be that recovery actually started and inflation is not coming back. So in the run-up to the election, there is a case for FMCG stocks minus HUL, which is expensive, and minus Titan to start outperforming. So I think the themes now which you need to focus on, if it was only roads, railways, defense, which used to be typical infrastructure, typical budget trade, this time it really could be FMCG, rural housing, and maybe some, odd rural-facing companies.
All right, let's shift focus away from FMCG and talk about real estate. And Ajmera Realty was a company in focus today. Did pretty well, up 3% is where the stock closed on the back of some good Q1 updates coming in. Now, we interacted with the management and they said that they are on path to announce 6 to 7 more projects this year after seeing bumper response to its recent launch. The management also believes that demand will remain robust and also shared their commercial real estate plans and the foray and the kind of foray that they're expecting to do into that sector. Listen in.
Launch which we had this year, we just launched one of the projects which we had announced. This year we're going to do about 6 to 7 project announcements, and one which we just launched, and that had a very good response, which we did in Bhandup. And overall, from the inventory, we've sold about 27% of the inventory already sold in just 1 month of the launch. So it was a great response, and overall the market has been responding well. Primarily right now, if we go to see, most of our projects are going to be residential, but we are also slowly moving into commercial because we are seeing good demands. We had a great success in Ghatkopar for one of our projects, and now this year and probably coming, we are going to have a few more coming in Vadala, Bandra, and other places. So definitely in commercial segment also we are moving, but with the kind of portfolio what we currently have, at least I'm seeing more of residential, but in terms of commercial also, we would be about 20-30% within our portfolio being commercial.
All right, that's the word coming in from Ajmera Realty, but there were many other stocks which were buzzing in the trade today on the back of some news. Jinay gets us a list of all the stocks in action. Jinay, over to you.
Well, so the first stock that will be in focus is Man Industries. The company received an offshore order of lines worth around 1,850 crores. Moving on, HPL Electric was a stock in which was in focus. Company signed MOU with a Chinese company for local manufacturing assembly of relay or latching relay in India. Next up, L&T will be in focus as renewable arm of L&T secured an orders ranging between 10,000 to 20,000 crores with the leading developer in Middle East for developing a 2 gigawatt solar PV plant. Moving on, NLC India was in focus as company backed its second commercial coal mine block at Odisha. Now this block has a peak capacity of about 30 MTPA. And lastly, Shalby will be in focus as company reported its Q1 FY 2025 results. If we talk about revenue, it was up about 18% this quarter versus last quarter of the same period, and net profit saw a downtake of about 20%, coming in at 16.6 crores this quarter versus 20.8 crores last quarter same time.
All right, Jinay, thanks so much for taking us through that, and shall be the one to talk about because that has kicked off the earnings season for Q1 and a slight drop coming in on that stock today as well. But let's move on then and let's talk about an ET Now budget exclusive now. We learned from reliable sources that the housing sector is likely to get a substantial push in the upcoming budget. The outlay for housing will be upped substantially, and we are joined by Prakash Priyadashi, my colleague, with more details on this exclusive. Prakash, what are you picking up? Take it away.
Yes, we are learning from our sources that the government is likely to make some big announcement for the housing sector in the upcoming budget. We are given to understand that the special focus would be provided to the affordable housing segment. In fact, the Ministry of Rural Development and the Ministry of Urban Development and Housing Affairs have sent their separate proposal to the Ministry of Finance. We are given to understand that the government is likely to make big allocation under rural and urban housing schemes. As you are aware, that the government has already made an announcement to launch a new housing scheme for urban poor and middle class in the interim budget, but it had not made any financial allocation under this scheme. Along with that, Housing Affairs Ministry and the Ministry of Finance were also working on the modalities which have now been completed. The sources are informing that the government is likely to make big allocation under this scheme, which could be in a range of 50 to 60,000 crore. Since this scheme is meant for urban poor and middle class, therefore, there is a proposal to provide a benefit of interest subvention to the beneficiaries, which could be in a range of 3 to 6%. Sources are also informing that the government is planning to provide financial allocation for construction of additional 3 crore houses across the country. Moving ahead, the sources are also informing that the government is likely to increase the overall financial allocation under PM Awas Yojana Rural by 15 to 20%, which is around 80,000 crore at this point of time. Since various state governments have submitted their separate proposal, and therefore the government is likely to increase the overall allocation under PM Awas Yojana Rural as well.
All right, thanks very much, Prakash. That's a lot coming in from the affordable housing space, PM Awas Yojana also, but then it looks like a big pie for insurance space also. In order to provide better health care to senior citizens of the country and increase penetration of insurance in the upcoming budget, the government may increase the scope of its flagship scheme, Ayushman Bharat Health Insurance Scheme, and announce the launch of National Health Claim Exchange. Anurag Shah joins in with more exclusive details on this. Anurag, over to you.
in upcoming budget, government is likely to increase the coverage of Ayushman Bharat health insurance scheme. As per our sources, in upcoming budget, government will announce coverage of senior citizens above age of 70 years also under the Ayushman Bharat scheme. Remember, in election manifesto, BJP has announced that they will cover senior citizen, all senior citizens above the age of 70 under health insurance scheme Ayushman Bharat. Ayushman Bharat is a flagship scheme of Government of India which covers 50 crore people below poverty line with a 5 lakh of a sum assured. So this announcement is likely to happen in upcoming union budget. Another important announcement which is expected is launch of National Health Claim Exchange. It is a Health Claim Exchange is a online platform for claim settlement. On this platform, insurance companies, hospitals, TPAs and policyholders will come together, and all claims at National Health Claim Exchange will be cashless. So it will be a major development in health claims because insurance companies are expected that after the implementation of National Health Claim Exchange, fraudulent claim will decrease and they will be able to pass on the benefit to policyholders. So these are the two important announcements related to the health insurance are expected in upcoming union budget.
All right, Anurag, thanks so much for taking us through yet another budget exclusive, this time on the insurance front. But viewers, on that note, it's a wrap on this edition of Your Trades from Priyanka, me and the entire team that put this show together. Thanks so much for watching.